Sell everything you got. Sell it, sell it. Then we've had 5 straight green days, followed by Monday and Tuesday. 7 straight green days, right? Some stocks are up over 20%. Let's look at my Facebook video, Meta, that I shot about a week and a half ago. I said at 185, 186, that's the time to buy. Facebook's up to 218 today. Now, does that mean I like Facebook going forward? No, I think it went up too quickly. Now, the American market, the US market, has followed China. China started the rebound with a 16% rebound last week, 6% rebound this week, 22%. And our tech stocks are up something close to 13% over the last week and 2 days of trading. We made 11% last week. Tech is up 2% today. And then they were strong. What, yesterday? No, it was weak. It was like 50 points off. So I wanted to pull up my trading account, the one that carries the equity positions that we follow on Iris, because people are saying, dude, your Iris account is like down 50%. No, I'm going to show you my equity trades. I think I've had 2 losing trades since I took over the account and we started posting it on Iris. It started with about $2,000. So we're up about 3% overall. The current position that we're in are UVXY, just shares. So I'm assuming the UVXY might have had a little spike because it just turned positive on the day. But let me get to my previous trades and go over them with you, okay? So I entered these trades a couple of weeks ago. Let me just see here. Okay, first trade, EBON, EBON. I bought at $1.05. It's around $1.35 today, 30% higher. I ended up selling. I think I took profit at about 14%. Why? Because I expected the market to go down, and I still expect the market to go down. Point is, I just want to show you these trades. Win. That was a profitable trade as well. OCGN is in the $4 range now. Cloudflare, $118. OCGN again. Starbucks was a struggle. I think I lost 1.4% on that. Then I'm back at Cloudflare again. I mean, you see the same stocks. EPAM, 189. I think I made like 5% on it. It's at 289 today. 289. No, 294. The point is, I've got a good list of stocks here. Wynn, Ford, Starbucks, OCGN, Ford. I mean, yeah, I sold them all to secure profit because I don't trust the market. With that said, I still don't trust the market. 7 straight green days, inflow days. There were stocks that nobody wanted any piece of. I'll use Wynn Casino as an example. Nobody wanted it at 81. Nobody wanted it at 78. Nobody wanted it at 75. It went down to $70. Since then, it just pressed $81 this morning. So again, 15%. Now, does that mean that Wynn Casino is bringing in 15% more revenue in the last week? Hell no. In fact, I would worry. Why? China, zero tolerance policy. Wynn Casino gets a lot of money. I almost used a bad word there. From Macau, right? The gaming capital of the world, the Las Vegas of Asia. All right, so I've got the one-day SPY chart sitting up here. We're sitting at 449.23. I mean, it's amazing that it's up this high. Why? But there was heavy buying here, heavy buying here, heavy buying here. So yes, there are some people buying this buy, but let's look at the chart again. Straight diagonal. I mean, there's no consolidation. We've had 7 straight inflow days. The UVXY has been outflow for 7 straight days. The volatility has been at its lowest level in the last 13 months. So I ask you to ask yourselves, does that make sense? We're talking about inverse yield curves, which could signal recession. We've got the 2-year, the 5-year, the 10-year spiking. Russia and Ukraine are still going at it. Russia's almost out of ammunition and money for the war. So what is likely is they will bomb even harder and commit many more atrocities. So let's look at the 5-day of the SPY. Here we go. And we can look at the 1 month, because from that bottom on Monday, you can see, now yesterday I told you 88 million, not much volume, 106 million. On outflow days, we're 164, 137. Here's an inflow day that meant something, 213, 145. So you get it? You can combine 2 days. Let's combine today at 55 million. Now, yesterday was 88 million, and I said volume was so low. So Tuesday, going into 3:33 p.m., volume's 55 million. So we're probably going to end up around 59 million, 59 and a half, something like that. So 30% below yesterday's volume, and yesterday's volume was 30% below Friday's volume. So what do I tell you? And I'll get rid of the chart for 1 second. As volume decreases, it's showing less of a demand. So again, my current positions, I took a beating on SPY puts. I'm not going to lie about that. They expire Wednesday, close of business, but I am taking a beating. I took some profit yesterday when the market dipped on the ones that were more out of the money. I think I made 84%. But the ones that I'm currently holding, I think are down about 84%. Then I have UVXY calls. Now, again, where's the SPY shooting up? The UVXY isn't dropping down. In all reality, if in normal world, if the SPY shot up as quickly as it did, the UVXY should be like 15% lower, and that's not happening. So it's telling me large institutions, and if you look at the large orders on the UVXY, they're buying it. So I'm holding that. That's what I'm expecting. So let me get that chart back up just so we can talk about what the SPY is. So SPY resistance was 444. It was 448 and then 450. I said I'm buying SPY puts at 450. We did not quite get there today. Let's just see what the high is on today. 449.86. I bought some anyway. I bought the SPY puts that expire tomorrow. I think they're the 442. Yes, so completely out of the money. Now here's the key. I only paid 36 cents per piece, or $36 per contract. I'll tell you where they currently are. Ooh, they're currently at $36 a contract. So it's more of a lottery play for me. But again, I don't want to invest in this frothy market. So you've got 7 straight inflow days. We're peaking where we had many challenges before. In fact, we were under that area for the good part of the year. So if you're telling me the market should be its strongest right now out of the entire time during the year, I would tell you you're crazy. I would tell you the market strength should have been the strongest before there's war in Russia, before the inflation and the yield curves are going up. So I would ask you to ask yourselves, should the market be at its strongest point right now? Right now, March, what are we, 20-something? Think of it this way. Earlier in the year, oil was a normal price. Now it's like $115 a barrel. Early in the year, there was no war going on. So if the market was going to be strong at any point, it should have been stronger in January and February than it is right now. So again, low volume on the SPY, low volume on the market. I'm not buying it. My equity positions are on the sidelines right now, but I will look to re-enter once I get that sale I'm looking for. Don't forget, give a like, thumbs up, and stay tuned for the next video.